What is good, guys? It's Rey-Jay back with another video, and in this one I wanted to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'm also going to break down why we have even more major data coming out for tomorrow that's going to affect the markets, but you should be watching for when the data comes out. Before I begin the devil's information, before I talk about all these different charts from Tesla to SPY, Nvda, and to the others, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit $500 into the account, you are guaranteed 20 free stocks. If you deposit $25,000 or more, you're guaranteed 75 of them, and the offer ends very soon in just a couple of weeks. Anyways, for the market right here, in my video yesterday, I said that we had CPI coming out and we should be expecting a big move. When CPI came out, it caused a very big move in SPY. The SPY popped a little bit to 521 as soon as the data came out, and then it dumped all the way down to 511. So we saw SPY drop 10 points, which is pretty huge. We got a big red bar after CPI came out. Then after that, it just traded sideways within this range. It didn't really do much after that. It was just stuck from that point on. So this just goes to show that when I make videos about how there's big data coming out, oftentimes we do see very, very big moves, and the data does affect the market big time. And that's why I want to continue to give you guys warnings about the next pieces of data that are coming out. So what is happening to the markets? I want to first talk about CPI a little bit. Then I'm going to talk about PPI and more data. Let's talk about CPI just one more time in case you guys missed my previous video. If you guys missed that video, you could just keep watching this. If you did see it already, you could skip a little bit forward. But as a reminder, we had CPI that came out. Okay, here are how the numbers look like again. We had 3.5% for CPI year over year. This is above the 3.4% expectation. Month over month, CPI for all items was 0.4%, above the 0.3% expectation. Again, core CPI year over year was 3.8%, above the 3.7% expectation from analysts. And finally, we got core CPI month over month at 0.4%, above the 0.3% expectation from analysts as well. So everything was hotter than expected in terms of CPI. And this is not the best of news because it suggests that inflation is still a big issue and things are still going up. And this is completely relevant to the data I'm going to talk about for tomorrow in just a couple of minutes, but that's very important. This is what the chart looks like. As you could see, for all items for inflation, things are starting to go up as this is getting inflated by energy. Energy is playing a big role in why this is happening. You can see inflation is now increasing again, and the Fed is in a very, very critical place. For core CPI, it's also going up just a little bit, not as aggressively, but it did actually increase. I know it's a little bit hard to see in this line right here, but it did go up just a little bit compared to the previous report. So that is some big news as well for the markets, and we're going to be watching to see how this affects us. So the first thing worth noting, especially when it comes to CPI and also PPI coming out for tomorrow, is crude is going up. So the cost of oil, the cost of a barrel of oil and crude is going up again. Energy is going up, gas prices are going up, and this is having a big effect on inflation because gas tends to lead inflation. Energy tends to be heavily dependent on CPI, not to mention vice versa. And this is very important. So when there's this high correlation between CPI and crude futures, seeing crude going up and possibly going up even higher as we approach the summer because of what's happening around the world and such, that's not the best of news. So this does add to the possibility of inflation going up again and even more. And we're going to be looking for more data tomorrow about this. I'll talk about that in just a minute. What else is important about this is how the Fed is taking this. So for May, we have FOMC coming out, right? And during the meeting, there's a 96.9% chance the Fed is going to keep rates the same. For June, however, we saw a big shift. And I was talking about this yesterday. So before yesterday, this was higher. The probability of the Fed giving us one cut was about 56%. And there was about a 40% chance of the Fed keeping the rates the same. That is how this looked yesterday from what I remember. This is shifting. Now the odds of us getting a cut have dropped, and the odds of the Fed keeping rates the same in June have gone up. What this means is there is a higher probability that the Fed is going to keep rates up for higher. When the Fed keeps rates up for higher, this is when things eventually start to, break, things get worse for the economy. This could even affect the labor market and factors like that. So it's very important to account for all of this. The Fed is in a very, very critical position. They know they have to be very careful with this inflation that's coming out, and they have to be very mindful of the fact that this is going to affect the lives of millions of Americans. So the Fed's in a position where they may have to keep rates higher for longer, and we may not get any cuts until we get closer to the election. as of right now, there's also now a higher probability the Fed may have to keep rates up for July, but it's almost 50-50. It's not like that certain just yet. It depends on a couple more CPIs. But for now, for the next two meetings, the expectation is the Fed is going to keep rates the same because it may take a while to see more good data. Now, during the FOMC minutes, this was based off like delayed data. So the Fed officials were saying that there could be cuts coming. They have to be very patient. They have to look at more data and such. Some were saying that it's possible for us to get some cuts. Others were saying vice versa. It was kind of mixed. Jerome Powell himself actually said that the Fed is going to be looking for more good data. They need more good data to be able to cut. So we're going to be continuing to wait for this. So with that being said, inflation's going up. You guys can see inflation is still a big issue. It's not out of the wind just like that. It's not out of the water. It's not cleared. There's still a risk of inflation going up again. This is not what Americans want. This is not what the Fed wants, according to the data. I also know that the data is very manipulated. We can't fully trust everything that's being said in this in terms of these numbers, but I simply have to go based off this data because this is what the Fed looks at. This is what the market looks at, and etc. All right. So, what does this all mean for tomorrow? Do we have more data tomorrow? Here's my answer. Tomorrow is Thursday, April 11th, 2024. Okay. Tomorrow, an hour before the market opens, we have the PPI data coming out month over month. We have core PPI coming out, initial jobless claims, and then, core PPI and PPI year over year as well. This is going to be very important. This is the main piece of data coming out for tomorrow. Whatever we get for PPI is going to have a big effect on the whole market. Just like how CPI came out today, SPY went up to 521 and then dumped all the way down to 511, then just traded sideways. A big dump came today on SPY and the QQQ because of CPI. And then for tomorrow, PPI is going to affect us as much. Might not be as big of a move, but it still could have a big effect on volatility. And it's going to dictate the flow of the day. So make sure you watch this data very carefully. After all the data comes out at 8:30 a.m. Eastern Standard Time, an hour before the market opens, right? We also have at 8:45 Williams from the Fed giving a speech. Then we have Collins giving a speech, and then Bostic giving a speech at 1:30 p.m. So we have a bunch of Fed speakers after that. And mainly just a few bill auctions, all very, very minor data after that. The main piece of data is going to be PPI for tomorrow, so watch for volatility. As of right now, the market is neutral. We're getting closer to becoming fearful. We're still not that far from greed, kind of in the middle, and we'll see if things shift because we were at this territory before. The market is less greedy than before, and things are shifting a little bit. And we're starting to see the puts and call positioning going up as we're seeing puts entering the market again. And the VIX is continuing to push back into the extreme fear levels as we're well above the 50 daily moving average. So the market is shifting. We're starting to see some fear coming back. The overall indicator is still neutral, but this could shift depending on what happens for tomorrow. All right, so what can I tell you about the charts? Well, one thing I want to note is that SPY is looking like it's trying to push back up again a little bit. It does look like it's trying to do this from a technical standpoint because the last time we hit 512.5, we're very close to this range. We got bought back up. So, technically speaking, from a technical standpoint, okay, it looks like this could attempt to rebound a bit. We could be looking for a move back up to 516. However, technicals are only just a very, very small fraction of the picture because the PPI report is going to cause a bigger move, and that is a lot more impactful. That's a lot more important. So, PPI, if we get a decent PPI, and let me just repeat myself. So, core PPI has been decent overall. This is likely going to be fine year over year, just like how her CPI core was not that crazy. But what was a lot more impactful, in my opinion, was the overall number. So I think the same thing could be said about PPI. So I'm going to be looking more at this number down here, PPI year over year. Okay. If it is 2.3% or higher, okay, that's going to be bearish for the markets. Expect some downside if it's around 2.3% or above that, 2.4%. If it is 2.2% or lower, this could actually help the market rebound a bit. If it's aligned with expectations or below that, we'll be watching this very carefully. We are expecting an increase in PPI, by the way, so we'll have to see how this goes. We have the expectations over here, but what matters the most is PPI year over year. This is where we're expecting the biggest increase. We'll have to see what it is. When I talk about a hot PPI, I'm referring it to being above 2.3%. If I talk about a cool PPI or as expected one, I'm referring to 2.2% or lower when I talk about the charts, okay? So if PPI is hot, okay, that's bearish, right? If inflation is going up, this would cause SPY to potentially drop if it's very hot all the way down to about 512.5 and at least a 510.25, if not 508. We could be dropping all the way down here if we get a really hot PPI. If we get a decent PPI aligned with the expectations, going to be looking for a move back up to about 516.5, if not 518. Now, it all depends on the data, of course. The chart does suggest it's going to try to rebound a bit, but I can't promise anything. It depends on the charts. It depends, excuse me, on the data. So we'll just have to wait and see. So I want to make that as clear as possible. It depends heavily on what we end up seeing. For Tesla, we are dipping a little bit. So you could argue that we have a potential falling wedge like structure. I'm not going to worry about any of that. It really depends on if Tesla's going to rebound a little bit, which is very possible. Do we establish a lower high here? If Tesla kind of rebounds and retests 174 during the pre-market, are we about to form a head and shoulders? Is this like a left shoulder here? Is this a head forming? Are we about to form a right shoulder and start dipping? Or is Tesla about to rebound? It all depends on the data. If we're bullish after the data comes out, Tesla could be pushing back up to 178 all over again. If we're bearish, Tesla could be sinking all the way down to 165. The chart does look like we could be forming kind of like a head and shoulders, and we may establish a lower high and start sinking. So it does favor the downside a little bit more, but just to be safe, let's wait and see what the data causes. For the QQQ, this is looking like it's going to try to rebound a bit towards 440 from a technical standpoint because we have a double bottom like structure. But if we're bearish, if PPI is hotter than expected, this is going to be coming all the way down to at least 434, if not 432. So we're going to be looking for a big drop again. If we get a decent PPI, if everything's aligned with expectations and goes as planned, 440 is coming on the QQQ. I'm open-minded to anything, but the QQQ does look like it's going to try to pop a little bit, try to push higher. And one factor behind that is Nvda. If we get a decent PPI, Nvidia looks like it could be pushing all the way up to about 887. It looks bullish from a technical standpoint. It looks bullish based off the charts so far. But just to be safe, if the symmetrical structure plays out, we could push higher. But it also depends on PPI. If we get a hot PPI and Nvidia starts sinking again, we're going to easily come down to at least 854, retest this previous resistance becoming support. So I'm open-minded to anything, but let me just say that technicals look bullish on Nvidia right now. Look like it's going to get a small rebound. Not saying that it's going to explode to like 950ish or anything like that. The trend is still bearish for the bigger picture, but for the super micro short term, for tomorrow specifically, the chart does look like it wants to push a little higher, get to this 200 EMA. It does favor that somewhat more. I want to make that as clear as possible. Now, don't solely trade based off that, okay? Don't just say that, oh, because the chart looks bullish, Nvidia has to run. That's not actually the case. It also depends on PPI. So you have to account for everything and then watch tomorrow just to see how things go. I want to make that as clear as possible. All right. For Apple looks like it's trying to rebound just a little bit, getting very, very tight. Could be looking for a move for 169 to 170 if we're bullish. If we're bearish, we're going to be coming all the way down to 165. So we'll just have to see how it goes. Overall, though, let me just make it clear that Apple is not looking super strong or super weak. We're just kind of stuck for the time being. I would say, in my personal opinion, just wait and see what the data looks like and what it causes. I'm going to be very patient nonetheless, and there is a risk of this actually trying to rebound a bit based off technicals. I'm still going to be open minded nonetheless. So, with that being said, I went over the main five I typically go over. I just wanted to focus a lot more now on what the other tickers are showing us. So, I'm going to quickly go over these and then break down how they're looking. So, Palantir on the 4-hour time frame is looking a little bit more bearish. This is beginning to sink a little bit more, and there is a risk of this coming all the way down to about 21.88. However, it also depends on PPI. If PPI launches us higher, we could be making our way back up to 23.25. So be open minded, but just know the chart does look a little bit more in favor of the bears. Supermicro is trying to rebound a bit after we hit our target. So I called out in my previous videos that this thing might hit 850. We reached that. Now we're trying to rebound. We look a little bullish on the 4-hour. So it looks like it might be testing 933 based off technicals, but it also depends on PPI. If PPI is hot, 875 is coming. If PPI is decent, we're going to get 933. The chart technicals do suggest 933 is coming a little bit more, so it does favor upside. But just to be safe, we'll see what the data tells us. For Rivian looks a little bit more bearish. It looks to me like it might be coming back down to 10 to retest that from a technical standpoint. It also depends on the PPI report. If PPI gives us a launch upside, watch 10.42, followed by 10.65. Either way, it's kind of in the middle, could go either way from this point, but it all depends on that data. SoFi came down a bit, but we're at support right now at the 50 EMA. A good PPI could cause us to bounce and retest the 200 EMA at 7.75. If PPI inflation is hot and we lose the 50 EMA, we're easily going to fall down to about 7.25 again. I'm open-minded. The overall structure looks a little bullish as it's trying to uptrend, so it looks like it might try to rebound. I do favor that somewhat more. I'm going to be open-minded based off what PPI gives us. For AMD is trying to base right here at 165, even though CPI was hard barely, it didn't drop that hard. So for bullish tomorrow, look for a test of 170.5. If we break that, we push higher. For bearish, we're going to be sinking all the way down to at least 162. Overall, we have a double bottom leg structure, and this thing could try to rebound. So we'll just have to wait and see how it goes. I'm going to be very, very open-minded nonetheless. For ARM, for ARM or ARM holdings, we look a little more bearish, technically speaking. I could see a move all the way down to about 122.64 from a technical standpoint, but this also depends on the data. Good data could still cause it to invalidate these technical signals and push up to 127. But the chart does favor, we're going to come down to about 122. So just to be safe, try to be open minded. Coinbase is showing some life. Well, what's interesting about it is it likes to go back and forth and back and forth. We've been stuck between resistance at 262. We have support at around 240. So it's been going back and forth, not really doing a whole lot. Technically speaking, it looks like it might try to push a little higher, try to fill this gap up to about 265. So I do favor some upside on Coinbase, but just to be safe, it also depends on what we get from the data. Part of why I say that is because of this bullish divergence. We got a double bullish divergence, and we came down with a nice liquidity grab right here off this wick. So this suggests more upside is very probable for Coinbase. This could also depend on any SEC regulations, any news that comes out, but as of right now, the chart favors an attempt to go up higher. I see that to be more probable, and it also depends on what is said by what's said by the data and such, of course. But the chart does greatly favor upside. For let's see, this is Amazon. The trend has been a little bit more bearish for the last couple of days. If we lose 184, we're going to be sinking back down to the 50 EMA at 182. And if we're bullish, we're going to be looking for 188. Now, we had this drop in a little liquidity grab, so it looks like it might try to rebound a bit and push back up to 188. The chart has been trending downwards, but it looks like it might get a temporary push before anything, then just continue to trade in the range. So that's what the chart suggests. That from what I'm seeing, it looks like it might try to push a little higher to this resistance, 187, and then trade sideways. But it also depends on the data. So we'll see if the data causes a rug pull or not. But Amazon looks like it may try to push a little higher. For Meta, it's the same thing. We came down to about 507. We rebounded from there, got a double bottom leg structure. It looks to me like it might try to push up to about 525 again if we manage to hold above 516. If we lose 516, we're coming down to 509.5 again. So we'll just have to wait and see. Overall, I do see an attempt for this to go a little higher, though. So we'll just give that a little bit more time for now. For Microsoft, we're just completely stationary. If we're bullish after PPI, look for 426. If we come back down, watch 420. It's been stuck within a range, not really doing a whole lot. It's kind of boring, if anything. Google's on a very, very nice uptrend. It's holding the 20 EMA nicely. We are about to get a bearish cross in the 4 hours, so it might establish a lower high. I think it might push a little higher, could retest 158 if not 160, then come back down. If we lose 156, however, if PPI is hot, then we could see a bigger move down to 154. But as of right now, it looks like it may just like pop a little bit more and then drop. That seems a bit more probable. The VIX is trying to break out again, a little bit indecisive. If we continue to break above 16.5, look for a bigger push higher. As of right now, PPI is going to determine where this is going, but I want to note that the VIX is on an uptrend, which suggests that the market is downtrending. That's what's happening to SPY so far. This could shift if the VIX ends up losing the 50 EMA at 14.18. 14.81. So we'll give that a little bit more time. For the dollar, it's starting to break out a bit, which is bearish for the markets, but we're at resistance around 105. So we'll have to see if this breaks or not, if we get a rejection. So give this a little bit more time and we'll see how things go. With that being said, we're going to give this a little bit more time. We'll see how SPY kind of like reacts right over here. And let me just make it very, very clear that in terms of data and such, PPI is going to be very impactful. So get ready for that. And I'll be back tomorrow morning to talk about how things go. With that being said, I just want to say I really appreciate every single one of you guys. Please take care and have an absolutely incredible rest of the day. And I'll see you guys very, very soon on the next upload. Thank you for listening. Have a great day. I'll see you guys tomorrow morning when PPI comes out. The market to the moon because the long term is still incredibly bright, despite what we're seeing for the short term. And I'll see you guys once again tomorrow. Thank you for listening again, and peace out.